Yo, what's going on, ladies and gentlemen? I hope you are all doing well. So firstly, forgive me as I am not able to do a live stream tonight. So I thought, let me get this video done for you. Quick, fast, just to give you an understanding of what to expect going into tonight's open, which will be rolled out at 10 p.m. UK time. So in less than 45 minutes time. So let's roll with it. Ladies and gentlemen, what has Bitcoin been up to? It's been dropping. That's one thing for sure. Let's take a trip down memory lane. The green vector candle. What is that? That's a point in the chart, ladies and gentlemen, that we have been paying attention to. Here are screenshots from live streams. Please go back and watch the live streams. We have made reference to this point. Significantly, we've been making reference to the idea of the wick, the infamous wick. And this was taken from the live stream. Bitcoin live, well, Bitcoin dropped. Next zone. Now, although Bitcoin didn't come down from this point, we have the structure in the chart to understand that this is a zone that they are likely to come back into. We were waiting for this W formation to formulate so that we can understand if Mr. Market Maker is going to present himself. He ideally needs to be coming down here to finalize the wick. Now, when I say this wick, now this is on the 4-hour time frame, ladies and gentlemen. Come away from this, flip the chart back, go onto the daily time frame, and you'll have yourself a bit of an interesting scenario. Look at this. This is the stopping volume candle that appeared on the daily time frame. When this happened, I didn't like it. Why? Because price was always going to come back into that zone. Don't believe me? Go back in the streams and you'll see us talking about wicks all the time. Look at the last time they came back to the wick, ladies and gentlemen. They never thought that it would. This wick right here. This wick right here. Okay? They're always coming back to those wicks. Look at this one right here. Always come back to the wicks. Now, the phenomena behind the wick is this, ladies and gentlemen. People call this a rejection, but it's not necessarily a rejection. To the retail trader, it's a rejection. But what it is the market maker going down to trap the retail traders short so that he can utilize the liquidity that is committed down at these points. Because when you do open a short, you put up margin so that you can then ride the move to the downside. And then Mr. Market Maker is able to reverse price back up and hit your liquidation points, which reside at the points of your trades margin requirement. Now, what does that leave us with, ladies and gentlemen? Okay, great, Tino. Thanks for letting me know that the wick has been hit. Where does that leave us now? Well, ladies and gentlemen, given that this is the daily time frame, now we have a clean W formation on the daily time frame. Now, most of you are thinking, okay, what do we need to see? This is what needs to happen, ladies and gentlemen. Price needs to come back up from this point. If it violates, now listen, if it breaks below this point right here and continues lower and spends more time lower. So if the candlestick comes down towards this point right here, for example, let's assume it goes to 25K, okay, and stays at that point, the pattern is invalidated. Why? Because it would mean that the market maker favors lower prices and he knows he can actually get more traders committed to the downside. So he's going to do his job in this zone. However, if it does decide to come down towards this point, ladies and gentlemen, and spike back up, the pattern is still valid. Why? Because it will be a false move to the downside to shake out the traders to reverse it back up again. The commitment has been placed in the charts, ladies and gentlemen. Market maker has convinced everyone to run the shorts. Check this out. High block. It's phenomenal. Listen, last time we had a reading of $23 billion, $24 billion, 24.9 billion shorts in the range. 1,348 shorts are running right now, ladies and gentlemen. And there are 206 longs. Over here, we've got some phenomenal figures. We've got, where is it? Right here, here it is. $254 million worth of shorts on the 25x ranges. And it goes up and up as well. 160, we've got 132, and there's plenty more where that came from. There are high concentrations of liquidation points in and around this zone, ladies and gentlemen. That means at 25x, there are traders putting up more capital, okay? And their presence is right here. Mr. Market Maker can see that. But even though the short liquidations value comes to 25 billion, does it mean that they're going to come back up yet? Not necessarily. Because in the last drop to the downside, just before, from the move from November all the way down to the current price point over here. So if we look at just before it was this drop right here, there was about $54 billion worth of shorts in the range. Then they came back up and absorbed all those shorts, or a majority of them. Okay? So what I'm saying to you, ladies and gentlemen, is there is a possibility that they are likely to try and move price down lower if they don't hold price in this zone. Now, this would be a perfect formulation of a pattern to continue to the upside. What you'd be looking for is you'd be looking for vector candles to present themselves on the second leg of the formation move breakout to the upside. In other words, you need to see vector candles coming in here, and you need vectors to start coming in here. But we still have the problem of the 50 EMA in the chart. The 5 and 13 EMA are pointing downwards. Momentum is favoring lower prices, which then takes me into the higher time frames. Are we going to be going to a point in the chart which we are not aware of? No. Look at where we are. Look at the green vector candles. So the lowest point that the price has actually come to is the 26,722. Full recovery of the vector candle nearly. We still have this zone right here. So at most, Bitcoin is likely to come into this range right here, ladies and gentlemen. And if it does decide to do that, that will be consistent with them hitting the 200 EMA. Word on the street is that the S&P is going to be taking a massive bleed to the downside, and they're just scaring the life out of traders. So traders are going to be rushing to the charts later on tonight. So just be mindful, ladies and gentlemen. If you are running any shorts, pay yourselves. More importantly, if people are going to start running to the shorts, guys, then the market is likely to try and retrace back up to shake those traders out. So just be mindful of it. If you have the facility on TradingView to search for the S&P and the NASDAQ, all you need to do is you need to go to the indices, okay, and just search this ticker symbol up here. Where is it? ES1. And get the S&P futures, okay? So tonight we're going to see this chart open for out of hours trading. All right, we might get a gap down, we might get a gap up, but fundamentally they are expecting price to go lower on the NASDAQ and the S&P across the board. That means traders are really, really wanting to get out of their positions. But the same token, guys, when price is dropping, we understand it to be market makers, bigger players building orders. They don't buy when price is rising. They buy when it's dropping. So everything now is at a discount. It's all down to perspective, ladies and gentlemen, on how you translate this drop to the downside. Yeah, you can pick up Bitcoin cheaper. You can pick up Ethereum cheaper. Let's even go over to Ethereum and just check out what's going on there. Ethereum, my days. Ethereum has gone beyond the 1600 zone. They have gone beyond the actual 1800 point. Phenomenal. Yeah? Rejecting that daily open. And we still got a green vector candle range right there for them to come back into. So please be mindful. Ethereum has completely broken its range, and if you go onto the higher time frames, you'll see bright as day with Ethereum. Where is it? Weekly chart. We have this phenomenal weekly candle, but we've nearly recovered all of this wick. Look at that. And that was the wick from summer. All right? Ethereum has this zone right here, guys, so please be mindful of it. Be careful of this zone. Now, it's usually in these situations, right, where traders are going to be really fearful about things, all right? Which you need to make the decision and say to yourself, well, what am I going to do? Am I going to only day trade? Am I only going to, what am I going to do? Am I going to hold? What do I do with my portfolio? Well, that then leads us into an understanding of something else. What do we do? Or what does the market do during these sort of times, ladies and gentlemen? They run to commodities. So that leads me over to gold. Gold is on its way towards its completion of this happy days projection zone. I'm expecting gold to move up into this range, ladies and gentlemen. The W formation seems to be formulating and is on its way to finalizing to break out of the range. Why? Because traders are going to be scared now. What you've got to be aware of, guys, is this. Gold has been doing a fantastic job of holding in this range. Now, there are many guys out there, especially stock traders, that are looking at this big cup with handle formation for gold. And that's something that most stock traders like to look for when they are dealing with assets that are basing out, preparing for moves. But one thing I want to put into your minds, guys, is this. It pays for you to check out how stocks have behaved during these uncertain times. Why? Because when you see stocks accumulating in high volume, all right, given that everything is just dropping across the board, there's something happening behind the scenes, and the bigger players are getting their positions in now with the favor that price is going to come up at some point. Now, what I'm waiting for, ladies and gentlemen, is simple. I'm waiting for the dollar index to start turning over. You can see that the dollar index is so far near enough completing this M formation on the hope that if this M pattern does complete, then we would expect the dollar index to top out in this zone. It may even take out the high, but we expect it to top out in this point, which would then lead dollar yen to start making a move to the downside, which is what we want. We want dollar yen to start turning over, ladies and gentlemen. We've had a climatic candle right here on the daily chart, and dollar yen hasn't seemed to follow through because Bitcoin can only go up if the dollar index starts to drop. But this is something that might happen across the board that happened to the S&P and oil. Look at this. If you pull up oil, it's fully completed that recovery of the red vector candle, okay? Now, traders are scared because they run to commodities during these uncertain times. So you could trade oil, you could trade gold, you could trade wheat, you could trade soya, you could trade coffee. These are commodities that traders will turn to during times of recession. Now, hear me out with this. Back in the day when oil, during the subprime mortgage crisis that happened in 2007, 2008, it was making this move to the upside at the fear of what was going on with banks and the subprime mortgages. But oil did drop in the end, as did the S&P itself. So if you go back and look at the S&P in 2007, 2008, this dropped at the same time that oil dropped as well. Okay? Very important we understand that. In other words, if oil starts to drop down aggressively, then we're going to anticipate the markets to also follow suit. Okay? The 50 EMA for S&P is at the 3,500 zone. This will be the biggest test for the S&P. Now, when we correlate that over to Bitcoin, we're going to say to ourselves, oh man, where does that put Bitcoin? That puts Bitcoin at its 50 EMA on the monthly time frame. It puts Bitcoin at the 200 EMA on the weekly time frame. That would not be a surprise if Bitcoin hits the weekly time frame of 25,328. That would not be a surprise because that's the only point in the chart that Bitcoin has not actually hit for a long time. And it only did that when the 200 EMA was compressed together with the 800 and the 50 EMA and the 13 and the 5 EMA. This will be the first time that Bitcoin actually hits that zone. So, the start of tomorrow, Monday, false move week beginning. Be mindful with it, guys. Because if we do get a little bit of a recovery tonight, ladies and gentlemen, it may not be sustained until the New York session. So just be mindful of that. For my day traders, be mindful of the ranges as hit right here. Look. Yes, we've got a green vector candle right here that has been pretty much fully recovered. We've formed the psychological high and the psychological low. To make sure that you guys are safe, wait until they actually break away from either psychological range. Wait for them to break away from that point. Then you'll know the truth of the move. Because right now they haven't done anything. They have contained price in this zone. So just be mindful of that. Frankly, you'll be improving the chances of you taking any profitable trades or high probability trades if you wait until Tuesday, because we have tonight, we have tomorrow for the market to absorb any news announcements that have come out over the weekend. That's what leads the false move. Because imagine this. Imagine you're a trader in an institutional firm. You don't have access to trading the markets over the weekend. You're reading articles and you can see what they're talking about. These situations about war, the inflation rates, what could happen to the S&P, and all articles that are being rolled out over the weekend. The traders are then going to be itching to come to the charts to get rid of their positions. They're concerned. That's why usually you see Monday as a false move, whether it's to the upside or to the downside. Again, ladies and gentlemen, try and maintain the idea of focusing on movement, okay? The only time that I really focus on news is when I can understand the correlation between the actual news announcement and how it will impact Bitcoin. In other words, if the news is for the dollar and it's favorable for the dollar, we would anticipate that Bitcoin will trade against it. So if the news is positive for the US dollar will rise, and then of course, Bitcoin will drop. Okay? So, in my opinion, pattern watchers, I would suggest you wait until you actually see some movement away from the psychological ranges. Okay? You can see what the story is. We are waiting for the confirmation of them holding this point. Again, if they break beyond the 26711 zone, the pattern will be invalidated if they spend too much time in this area. If they don't show signs of coming away from this point, then we would understand that they are likely to come lower. Now remember guys, the move is very extended to the downside right now. We've had one test back at the 50 EMA, okay? If they're going to hold this point, so let's look at the opposite narrative. If they're going to hold at this point and that they've done the business, then we would expect them to try and come back up. Remember what I said to you before. Don't place longs when you've got a clear point in the chart that they could reject from. Why? Because if you do enter long from here and price then comes up, you see a rejection and it comes back down again towards your entry, you're going to hold that trade because you believe that because you had entered long at that point and it moved up, you're going to think it's going to come back to that point and do exactly the same again. Then you're going to give it a little bit more freedom to come back and recover the wick. And then you're then stuck in a situation where you're like, okay, is it actually going to go back up again? All right. Now, I hope this video has served you, ladies and gentlemen. I will be doing another video tomorrow for you. So please forgive me for not being able to go live tonight. But just please do what you will with what I have said tonight. Okay? Just be mindful. The Monday is always going to be a tricky day to trade. Times are very uncertain. If you're opening any trades, take whatever money the market gives you. Okay? You're not interested in being able to exploit Bitcoin from this point all the way to the downside down at 24,000. You're not interested if Bitcoin's going to quickly take a point from this point and then make its way up towards 29,600. That's not what you are here for. You are here to understand the game of trading, and the game of trading says you buy at one point and you sell for a profit at another. That's the fundamental practice of trading. You want movement. If you want to make sense of movement, go into smaller time frames, okay? A simple strategy for you, ladies and gentlemen, would be every time price deviates away from the moving average and you see a vector candle present, you'd anticipate that they're going to come back up and fill that point at some stage. Be mindful of the previous vectors in the chart because these are points where they had aggressively moved from, which means the market maker is likely to come back towards those zones to get the same interest to do the same thing again. So just be mindful of that, ladies and gentlemen. I will check in with you all tomorrow. Mad love and respect for passing through. And if you are new to the channel, be sure to like and subscribe. And I'll be bringing the fire to you all tomorrow. Take care of yourselves, family. Again, I apologize for not being able to go live. And I'll speak to you tomorrow. Take care of yourself, guys. Peace.